everyone, welcome back to ASX Market Watch and charting trend signals around the world. Thank you very much for joining me. Looking at some Elliott wave counts again this week, just because people seem to dig those things. Also looking at solid trend signals because that's where I believe the money is made. We look at the indices around the world because we believe that 3 out of 4 stocks will follow those overall indices. Let's start off down under Australia. Really quickly, guys, I thought I'd give an alternate count, an alternate Elliott wave count to what I was looking at last week. Just really quickly, if we're looking at this, see these downward, this downward sort of move that we've had over the last, from sort of May 2011. Incidentally, we called the downtrend in May 2011 based on solid trend signals. That's why I like them. Anyway, we've got that. We've got our sort of, this is just another potential way of looking at it. And the reason I'm doing this is because this massive sideways movement right here is potentially a continuation pattern. So yeah, look, basically it's hard to say at the moment because it's a sideways movement. Really, we need to wait for a breakout to sort of confirm which way the market will head. We need the market to show its hand, so to speak. Anyway, as you can see, it went 125% of the original move there. So there's our original move. And then this next move down went 125%, which is fair enough. That's fantastic. What we've got from here on in, potentially, is if it does break down to the downside, so we're sort of talking down below around 4,150 on the all ordinaries there, that would sort of tip its hand, basically, to the downside. From there, you'd be looking at a potential move to around 61.8% or 75% extension, and I'll just extend that a little bit so we can see it. See, there's our original move, and here's our potential move if it does break down to that downside and gives us a bit of a trigger. So look, and sort of the trigger would be below that uptrend line really as well. Currently, at the moment, the market is holding right on that uptrend line, which is good. It's good for now. It's good news. What we'd expect is, potentially 61.8%, which is around 39.50 on the All Ordinaries, or 38.50 for 75% extension. Hope that makes sense. And the reason I say those two figures is because that would make it a 1, 2, 3, 4 sideways movement, and then 5 last leg down. Hope that makes sense. However, that's not what I really want to happen, obviously, because I'm long stocks at the moment. So, if we were looking at an upward momentum, I'd be looking at 161.8% of this little peak and trough here at about the 5,000 level. So look, if it breaks out above 4,400, which, one day, hopefully it will. We've had this sideways movement now for about 6 or 7 months. Apart from that, if it does break out to the upside, potentially we're seeing 5,000. 5,000 is a nice big fat round number as well. Lots of psychological presence around there. Hope that makes sense on the All Ordinaries. Really quickly, Dow Jones. What did we say last week? We said that it would find a sideways consolidation at around the 13,000 level. And what's happening? Well, a sideways consolidation at the 13,000 level. Pretty good, huh? Apart from that, really, the reason I said that is because 13,000 is a big fat round number. Again, nice psychological number. Also, it's 100% extension of this little previous move here. So really, that's where we're sitting at the for the Dow Jones at the moment. If you were to look at an upside target on the Dow Jones, let's have a look. We'd be looking at 14,000. There you go. We'd be looking at 14,000 potentially as an upside target for that particular move. Now, what we've got is we're still in an uptrend, obviously. And actually, check this out. Here's our uptrend line. As you can see, I'll just make that a solid line so you can see it better. And where did the market find support? Well, it found support right on the uptrend line, exactly. So basically, so long as that holds for now, then we're in good happy days, good territory. And expect the market to still find sideways consolidation. If it breaks out to the upside, then obviously happy days will be moving to the next target, with the very, very top target being 14,000 currently on the Dow Jones. Really quickly, similar deal for the S&P 500, just finding resistance sideways, and it'll consolidate sideways around the previous peak. So yes, that's not rocket science in any way, shape, or form. Markets tend to consolidate at their previous highs for obvious reasons, because the people who bought down here are now selling up here, and the people who buy on new highs are now buying here as well. So basically that's giving us buyers and sellers in competition around this level, which sort of stalls the price for a period of time until one side wins out. Of course, supply and demand. Very simple stuff. The FTSE, really quickly. Wow, look at these lines on the chart. These are left over from last week. My apologies, everyone. But the FTSE, in all seriousness, we called a new uptrend, obviously here. Still in an uptrend, still going nice and strong. And just finding support at the 50-day moving average, which is that red line, which is great. And yeah, really not too much more to it than that. I think the FTSE is probably in the same scenario as everyone else. Yes, it is. Actually, this is actually quite amazing. Pretty much every market around the world is finding, every major market is finding resistance at 100% move of the previous peak and trough there. So it's quite a common phenomenon at the moment happening in the FTSE, just like everywhere else. Obviously, it's at 6,000, which is a nice big fat round number again. So this is obviously, as you can see, other markets around the world are doing exactly the same thing too. So I mean, that's good. Apart from that, if we were to look at an upside target, still in an uptrend, by the way. If it was to close down below 56.46, that'd be a bad signal. That'd be a sort of an exit signal for myself. An upside target for the FTSE. Let's have a look. That would be around about the 6,500 mark, about 6,500. So that's going to be quite a decent sort of roundish number as well. But yeah, in the meantime, it's got a lot of resistance to get through, guys. So don't hold your breath. But as well, the uptrend still does remain. So yeah, pretty simple stuff there as well. What have we got next? Let's check out the Hang Seng. Hang Seng, same deal. Look at this. We've got 100% of the previous move. That's exactly where the market is finding resistance at the moment on the Hang Seng in Hong Kong. And again, still the uptrend does remain. So it's above its 50-day moving average, which is that red line there. And also see this longer term trend line now. We have an uptrend line, which is fantastic. That's that's what we're looking at, which still means that the market remains in an uptrend as well. And again, upside target for the Hang Seng, looking at 24,000, guys, on the Hang Seng there. Really simple stuff. What have we got next? Shall we check out the Nikkei? Yep. I love the Nikkei, and thank goodness a couple of weeks ago we called a new uptrend around about here, around about this level here. Look, the Nikkei is just it's bucking the trend big time. I think there's monetary stimulus or something happening. To be honest, I haven't read the news in quite some time. But yeah, look, basically, whatever's happening, we called the uptrend, and it's definitely in an uptrend. In fact, it's quite parabolic, it's actually dangerous if it does break. So just be very careful if price breaks below the previous trough. So we're talking about 9494 on the Nikkei, 9,494 in other words. If it does break below that, I'd just be very careful, because parabolic trends that go like almost up in a straight line, which is what this is doing. When they do break, you just have to be very careful, because obviously everyone who's bought on margin or basically all their stop losses will start getting triggered. They'll have to sell down, and it just sort of snowballs. At least that's potentially what can happen. In the meantime, definitely the uptrend still remains. What I'd be looking for is a sideways consolidation at some point. I was expecting it this week, but as you can see, the market has continued to head up. So yeah, look, if we're looking at it on a shorter term Elliott wave basis, 1, 2, 3, or 1, 2, 3, 4, 5. If we're looking at a wave 5, we could potentially be seeing, and I'll just enlarge that a little bit, the top there at about 10,000. 10,000 being a nice big fat round number, of course, yes. So we've got ABC correction potentially coming up on the Nikkei. But again, follow your trend signals basically, because that's sort of what keeps you a bit more a bit more safe, I think, if you have a line in the sand where you'll get out. And at least that's the way I tend to think of things. Really quickly, and last but not least, is the Shanghai Composite in China. Why do I include the Shanghai Composite? Because the All Ordinaries tends to follow the Shanghai Composite in some way, shape, or form. Right now, the Shanghai is heading up, which is good news for the All Ordinaries, in other words. And again, it's just consolidating at the 150-day moving average, which is that green line, and that's a great place for it to consolidate. That if it does move up from there, so if we're talking about 2,500 on the Shanghai Composite, if it moves up past that level, that's a very good sign for myself. Apart from that, yep, it's still in a short-term uptrend. We called a short-term uptrend a couple of weeks ago. And yeah, that's pretty much it from the Shanghai Composite point of view. We haven't had a solid peak and trough, so we can't give you a target on the Shanghai Composite just yet. But anyway, that is the world from a Chartist point of view. Happy days. Hope you've had a great week, and hope you're looking at the right sectors and investing accordingly. Apart from that, I will see you next week. Happy trending until then, guys. Bye for now.